Welcome to Momentum Monday. Today is January 23rd, 2022. Howard, how are you handling the bear market?
I haven't had a drink in a while.
Is this your remedy? Cough syrup?
I got a red Jolly Rancher.
Low.
Johnny Walker Blue.
And Johnny Walker, yeah.
Meanwhile, Rachel's downstairs on the Peloton. I'm gonna have to go get it. She doesn't know how to click out of the Peloton, so I may have to go.
Have you told her that half of her account is in Peloton stock?
I wrote about it. We owned it on the way up, and we were selling it. Like, it's weird to look back at some of the sales. I was selling it at 50 and 60 on the way up, which seemed like really dumb.
Mm-hmm.
And then on the way down, I think, sold the last piece at 60.
Mm-hmm.
And I don't know why I actually sold it. I was still kind of like believing in it, but it was just so broken. But anyways, 27, 28 bucks. I was writing a lot this week. I call it the great round trip, right? Like, we could just go through so many of these companies that have round tripped. Peloton being one of the weakest ones. Let me just go grab my pup. Hang on one second. Lindsay, come here. Hang on.
All right, I'm here.
Oh, it's probably one of those kids. I'm drinking. I got the dog here. So Lindsay doesn't know that we may have to sell her for cash. Just to
Carvana, right?
The Carvana thing.
Yeah.
I'd be shocked if it doesn't go to zero. Pull that up. Like, it's the only trade. It's my only trades that's worked this year is selling my used car. So pull up the.
Well, it's down 64% already.
Looking at this, pull up Chewy because Lindsay's here today. Hang on,
all right, let's take a look at Chewy. 68. Wow, so many stocks down between.
Oh my goodness!
50 to 70%. It's unbelievable. It's not just SPACs.
It's back below its IPO price on it.
No, not really, but close to it.
Yeah, I was looking at, FIGS, which I'm looking at the IPO list just to find great companies, but that went straight up after the IPO. This is like a Shopify store that does medical gear. It's kind of like Lululemon for nurses and doctors. And what is that now? 20.
Down 58%. Wow, crazy.
Yeah.
I mean, Shopify.
These are short periods of times too.
Yeah, it's down exactly 50% from an all-time high just 2 months ago. So in Shopify,
it went from like almost breaking out on relative strength to now a relative strength on 17. So this is going to be kind of
crazy. I mean,
the great round trip. The only stocks that it hasn't affected are a couple of weeks ago, Ivan, I said X is over Qs. And it seems like that's, they're going to play catch up to the downside if this continues. But like if the XLF and the XLE are kind of not giving back much, where's XLF?
Oil is the only one that is holding. Everything else was kind of hit last week. Financials.
Not really. Considering how weak the tape is, financials still look good. I wouldn't touch them, but
Compared to tech, yes, everything is looking great.
Emmys look great.
They are starting to crack. They're starting to crack.
But that's still, if you're going to see a bounce in tech, it's going to start.
Obviously, if we continue to see that rotation from growth to value, maybe financials and commodities are going to hold a little bit better than the rest. But who knows?
I mean, look at even Coinbase. Came public at 400.
Well,
it's a levered crypto trade, right? So it's a levered crypto trade. So on the way down, it's going to be worse than crypto. But here you go. Where's the valuation here? This is on my list at some point. Because
40 billion.
Yeah. So in the 20 billions, they probably have 10 billion in cash. Like, we are getting, listen, as silly as everybody thought growth was, the correction is so quick and these companies are growing so fast. So pull up Netflix, for example. Wall Street, this is what's broken about our markets, is a top 10 market cap stock, on news that really wasn't shocking, what their forward numbers aren't great. For that stock to go from 700 to 400 well, for 5 something to 400, and you know, it just goes to show you how little liquidity there really is in the system. That stock shouldn't. At what valuation is that? 400.
176.
Yeah. So a stock like that shouldn't move 40 billion in a day. And so all this, you know, so you got to be really careful right now. Obviously,
This can happen to Netflix. Imagine what can happen to Dogecoin or stuff like this.
Well, I don't know about Dogecoin, because if you're in Dogecoin right now, I think you can't be helped at this point. I mean, God bless, but Netflix is 3 times the size as it was in 2018. So, you know, again, they're not cheap. These stocks are never going to be cheap in an economy that's printed so much money, and in a, you know, and people will pay up for growth. But man, you know, to give up 3-4 years of gains, and the company is just so much bigger. And with that focused a business model and subscriptions, you know, I'm going to buy this dip this week. You know, this is one of my 8 to 80s that I'm going to add to. I'd like to see some strength there for it to stop going down. But again, you can't, these things are crazily overdone. Pull back up Shopify, Evan. I'm just going to go through some of my favorite names. Listen, I own some, you know, I mean, I literally got to be prepared for the 600s, which puts you back to March 2020 prices before the pandemic. And you can't tell me that Shopify is not a better business than going into the pandemic. So overvalued or not, growing slower now than before, not. This business is more dominant than ever, but people are looking for liquidity right now. And this is the first sign of panic since March 2020. What I don't think is the same, Ivan, you can tell me here, is the price now has changed sentiment. It's kind of something that's like a famous saying. And now, you know, with interest rates, you know, starting to be priced in, or and inflation in the system, and still, you know, a little bit of chaos in the supply chain. It's a tough market. You've been kind of conservative, so what do you say?
Yeah, I've been conservative. Last week I told you that I think this is a marketing correction. This is exactly what we're seeing. Last week the market was only open 4 days, and every single one of them, the S&P, all the major indices closed near the lows. You know, they would just try a brief intraday rally for 45 minutes, and they would just be, you know, slammed down. So
a lot of distribution, though.
Relentless selling. That's what I'm
if
seeing.
If you look back to the beginning of January, there was a lot of distribution preceding this. So yeah,
so major selling all around. More and more sectors getting hit. Oil is the only one left, and probably it's gonna crack. So look, there is a 10% chance, I think, that this is the beginning of a bear market. And by bear market, I'm saying, you know, lower prices in the next year or two. Obviously, some of the most fierce rallies happen within the context of bear markets, and then you can see some, you know, big 20%, 25% rallies along the way. But there is a 10% chance that this could be just the beginning of something bigger, considering how tech has done in the past 10 years.
Yeah.
But shorter term, next week, I think there is a FOMC meeting Wednesday. And typically, in the past few times, we would see the stock market kind of sell off ahead of the meeting, being afraid if the Fed is going to do anything. Usually the Fed is just mostly talking and doing very little. So in the past few times, we saw a rally right after the FOMC meeting. So maybe we'll see something like this time again, at least short term. Overall, I would say people need to remain cautious. I think we're still in a correction market environment, which means that you need to be very nimble. And if you're going to be trading, it has to be shorter term, unless you have like a really, really long-term horizon like Buffett, then it doesn't matter.
Yeah, even a lot of the guys who I follow that have been short the S&P are going to start covering Monday and Tuesday because it's such a big win for them, and then, you know, they know that this has been a relentless sell-off. And like I said, some of these, like even Robinhood and Coinbase, they'll start trading at cash value pretty soon.
Let's see. So, I mean, the S&P is down less than 9%.
Right, but the S&P is Apple, right? Warren Buffett owns 50% of the stock. So Apple's reporting this week. You could get if Apple just says something half wrong, you're going to see the stock in the 130s, 140s, and people will step in there. So we're closer. Again, barring this isn't something we don't foresee, but the economy is not horrible. The country's half open. I'm seeing some incredible innovation around APIs. Mark Cuban launched a low-price pharmacy today, and I was looking at this site, TruePill, that I've had him on my show. The VC, I'm having a senior moment, but there's a company called TruePill that powers all this, and I'm not going to share my screen, but there's so much innovation around e-commerce and consumer products and bringing down costs where it matters, education and healthcare. So there's so much to come out of, which will create more chaos, don't get me wrong, but there is so much consumer savings coming. Despite the concerns around healthcare, because of technology. So at some point this sticks in. And the cloud stocks right now are hated. If we rip through them, Cloudflare, some of these cloud stocks.
Yeah, this is the ETF.
I didn't know.
Cloud.
Do you know what's in that? I've been looking for
everything.
ETF.
So it's basically down 36% on average. The cloud stocks are down 36%.
So again, so if you see this in the low 30s, this isn't like buying Exxon in 2020, right? This is buying. Some of these companies are fast growing like crazy. So if you see Cloudflare in the 60s and 70s, think about what you were doing in 2020 in March during that panic, and know that these companies have grown so fast. So again, I would start watching this ticker, WCLD, but like in the 30s, you have to own some for the next 10 years. Now, the components of that, I said, are Cloudflare, Datadog, DDOG, this super fast growing company. But again, if that's in the 80s again, which could be this week, these are companies that the institutions are going to be gobbling up. Snowflake, never going to be cheap, but below it, I think getting down below its IPO price. So these are the ones that I'm watching. Back around 200, could be there tomorrow. Asana kind of gave back, ASNA, I think. It's another great enterprise cloud company. Great IP, but again, right back into its base here in the 40s. Here's a chance to get some of these growth stocks down 70%. So that's what interests me. The X's over the F's, I get. X's over the Q's, I get. But I'm always going to be a QQQ over SPY guy. So when you get a chance to buy some of these Q companies down 70%.
I mean, I agree with you. When they're down so much, when the market is so oversold, you can gobble some. The question is,
no, I think even long term, Ivan, the economy.
When are you going to sell? Is it a trade? Is it an investment? That's the.
I personally think it's hard to trade them, but I think you can start entering positions here. And I own a lot of these, so I'll be looking at to Shopify and Cloudflare and Datadog. Asana is something I'm doing work on. I'm trying to think what else I'm looking at. The Trade Desk, TTD, it's kind of dominating the ad space. But again, this no rush here, but in the 30s, if we're in a crash mode. So again, I think it's a valuation-based correction based on interest rates and the government and some liquidity, short-term liquidity. It feels like people are blowing up. ARKK, if Tesla goes, this will be in the 50s. And unless you really think she doesn't know what she's doing, you basically have given back, all the 220 gains. So Tesla's really been the differentiator. If you were making money the last few years, Tesla was in your portfolio, or you were in the energy trade. And pretty amazing. What other drops have you seen that are kind of like amazing?
I mean, biotech is a pretty starking example that it's down to, I don't know what, 2018 levels. So even more. Let's take a look on monthly. So basically down to 2015 levels. So
even after the pandemic and all
7 years of nothing. This is the XBI. This is the index. Like, imagine what
is this the equal weighted one, Ivan? Is this the equal weighted?
I'm not sure, but definitely it represents a lot more stocks, smaller cap than the IBB. So it's a better representation of the sector. So 7 years of nothing. And if this is the index, imagine what's under the surface, like the smaller stock, what's going on there.
Yeah.
So definitely major damage. And obviously this is all related to rising inflation expectations, expectations for rising interest rates and just repricing of assets in general.
Yeah. Listen, again, the market is really hard because it's so politicized, which is why, indexing is working too, is just get everybody to just play the game. They may not have to raise rates. You have 3 more weeks of this. I don't know, this kind of self-corrected without rising rates. Basically it's as if you can keep rates at zero if asset price, if the NASDAQ drops another 10, 15%, wipes out a couple of years of gains, why raise rates?
Well, it depends if they care about the stock market right now, or if they care about.
Of course, they care about inflation. The stock market. That's the only way to get elected. I mean, corporations run the country. So, you see 15% more on the NASDAQ, people will be saying, why do you need to raise rates? Anyway, I wouldn't invest based on that. I'm just saying, the market's kind of taking care of the rate rise before the rate rises here.
Well, that's usually the case. If the market is forward-looking, the question is it going to be, longer term than what people believe? Because as of right now, there are a lot of people that are not only in the crypto space, but also in the cloud space. There are long-term believers in the technology, and maybe they went up right, but maybe you're too early. Maybe there's more damage.
They're too confident too early. And the vol too, if you look at Bitcoin, one of the beautiful things about crypto.
Okay, let me pull up Bitcoin.
Yeah. One of the beautiful things about crypto is there's no way to close the market. So it just wipes everybody out. Like the Saturday morning massacre. I don't know. I read that hundreds of thousands of accounts were wiped out in Bitcoin futures. 100%. So it doesn't have like the Fed intervening.
Okay, 1 second.
It's amazing that Marcus Smith doesn't have crypto yet.
Yeah, it's surprising, but that's what's going on. So yeah.
Come on, Rach, hang on. Rachel is locked into her pedals on her Peloton.
All right.
That should be a video in its own. So here we go. So there were hundreds of thousands of people wiped out on this move. And we're basically just back to 2021 prices.
50% drop, which is not.
So can this audience, can these new investors who don't understand leverage survive a move to 20,000? No. So you could see cascading prices in this sector. What people don't understand is there is so much money newly allocated to this sector in funds that I just don't see a catastrophic. There's too many smart people and there's too much money here to buy the dip. Again, macro, I have no fortune. I'm not a fortune teller about like what could go wrong, but I think I'm like you, 10 to 20% risk of a bear market, which would really just come from sentiment. I don't think it's economic. I think it would just come from the sentiment of people being, nervous and tired.
Yeah, currently the sentiment is becoming very pessimistic, like especially considering so far the market reaction to earnings. I mean, TSM had like a record quarter. This is the biggest semiconductor producer in the world, and I mean they gapped up and then they gave it up. Netflix had a decent report. You saw the reaction, down 20%.
Yeah, I mean Zoom. Listen, I haven't sold my Zoom because it's 5 times bigger than it was 2 years ago. Despite everybody saying with the end of pandemic, they're growing faster than ever. So again, great companies are always going to be overvalued, right? They don't have to ship cycles to anybody. They've got Google and they've got Microsoft up their yin yang. But again, this company is 5 times bigger than it was when it broke out in March of 2020. So eventually people will say, wait a minute, video conferencing is not going away. We may do it less, but you're going to pay the same amount of subscription. The products are going to get better and better. And, we'll be outside and we'll be networking, but you and I will still be doing this show on Zoom for 10 years and doing our communication like this, because it's perfect. The fact that you and I can sit down and do this and share it is not going away. And there's no better format to do this. Why should we get in a studio and do a high produced show? So again, people have to keep their heads. There is a bear market, not in the full market, but there has been one of the worst bear markets that I've ever seen in growth. Okay. And there's reasons for that because of interest rates, inflation, overvaluation, and hot money. But at some point, these great companies will find footing. The key for people is to, keep some powder to buy these things, and then give yourself a time frame for these companies to correct themselves. But you've nailed it too. You're kind of just on the sidelines or short. You were probably short a few minutes.
So I mostly do intraday. So yeah, I do both short and long, but intraday, like I don't want to hold overnight anything right now. And to your point, yes, at some point those growth names will represent great buying opportunities, but we don't know when. And markets tend to overshoot, and just like they overshot to the upside in the past couple of years, when the Nasdaq 100 went up 50-60%.
Absolutely. We may never see a market like we see.
They can overshot to the downside. And you might think that, Zoom used to trade at 300p like a couple of years ago. That's super high. Now it's down to 30. That's reasonable. But if the market overshot, that P can drop to 10, because during bear markets and during periods of pessimism, we see a multiples contraction. So that's the risk right now. That
for me though, in 8 to 80 brands, I'm going to be using Zoom 20 years from now. I can't see myself using Microsoft.
You don't really know. There might be a new technology. Facebook may come up with something where in the metaverse.
It won't be Facebook, but Rachel has figured out how, instead of clicking out of her shoes, she just got out of the shoes and left the shoes attached to the. So there is Rachel escaped from Peloton, should have been a video. I'm trying to think what other stuff I'm looking at, Ivan. I'm trying to think what else is interesting out there. But yeah, I'm definitely caught off by surprise at how relentless the selling's been. But it's also more like I'm making the calls to hedge funds. I just don't want to buy. There's kind of like a buying strike. It's kind of like there's no bid.
Look at last week. Every single day, like finishing near the close. I haven't seen so much relentless selling in a while. It's just every single day.
Yeah, and this can build on itself. So don't get me wrong. I don't want to be the only guy here, but I've kept high cash positions for moments like this. And I don't really care about Goldman Sachs and JP Morgan and all these fake companies. I want pure growth. I'm always going to overpay, but I'd rather overpay when they're down 70% than when they're at all-time highs. So it's really a tough spot, and you really have to know your position. That's why I stick to my 8 to 80 portfolio. But oh wow, this IGV so was holding. So now the software index is down. How much? Give me the.
Let's see the weekly. So 24. So it's not that bad.
I'm just making some notes. Hang on. WCLD. So yeah, if this gets down around the 300 area, you're basically back to March 2020 prices with all these new companies onboarded and growing still. So again, you've got to have some levels and you've got to have a plan, but we may just you have to kind of pick some lines in the sand where you want to put some money to work, but.
Look, a lot of those mega caps, they still have a lot of cash. They're still acquiring. So a couple of
Microsoft bought Activision. So like I said, Microsoft bought Activision. You have all these crypto funds layered to the hilt with cash that are going to step in and just buy the layer one blockchains because they got to put the money to work. So you could see a shit pile of acquisitions, especially in fintech now that Square's down to 40 billion or 50 billion. It could get bought by JP Morgan. It's not going to. Because Jack won't sell. But thank God Jack is just wrecking one company at a time right now. Oh my God. What are you trying to make me feel bad about myself?
No, because you mentioned potential acquisition. So I'm thinking like, what's
They
better
won't
way?
sell.
What's
Square
better
wouldn't
way to?
sell, and they won't sell.
Okay.
But what I'm saying is, at some point,
Okay,
people will go,
let's
wait
check
a
on
minute.
PayPal. Wow.
Yeah. Now that's a really big company at 200 billion. This is not a small company. So it's even though it's my favorite one of the fintechs, it ain't cheap, right? But there are a lot of $5 to $10 billion fintech companies that'll get bought. So, and then I was looking at some of the IPOs out in like DLO, which is Latin American Stripe. And again, this is not cheap, but this is a great infrastructure fintech company. Adyen, wow, is that the IPO index?
Yeah, it is. So down 42%. So
I thought the ticker was IPO, not IPOS.
IPO is less liquid. So both.
Okay, so give me the IPOS. Sorry, I've been following the wrong one.
So yeah. So
IPOS is more liquid?
Yeah, I think it's more liquid. Let's see. So this one has 560 market cap, and the other one has 1 second. IPOS. Okay, the other one seems to be bigger, so I don't know.
Okay, so this one's down about 50%. Wow, what a give back.
Actually, IPO is the more liquid. Yeah, IPO is more liquid.
Yeah, more liquid.
But they're down the same, 42%. So
right, but to go buy some of these guys, and again, I'm not saying you should. So I'm looking at like NerdWallet. So NERD maybe? Again, small company, know the founders, right? This is traded down to about, what's the valuation? No, NRDS maybe?
Yeah, exactly.
NRDS. I was looking at this, and granted, maybe shouldn't be a public company, yada yada yada. But what's the market cap? 500 million. This is like $1 billion acquisition for somebody. So I'm saying I don't have the stomach to play small caps, but these are good businesses. Maybe they shouldn't have been public, but there is going to be a gigantic amount of acquisitions in the $5 to $10 billion range if this persists, because we're not in a bear market. So for people that want to do work, this is what I was saying about the private market. I've been bitching about the private markets, all these people paying $50 million seed. I'm on both sides. And I'm like, wait a minute, you're going to tell me, and I'm not saying I'm going to go trade IPOs, but I am tempted to put a lot of money into a basket of these, saying, these are good businesses. Maybe they shouldn't have gone public, but they're worth a lot more than what a scared, there's just so much supply out there, and there's not enough analysts, there's not enough people doing the work. And so you have all this massive supply of new companies with no coverage, and they're just getting sold, by shareholders who have never been in the public market. And because they were a seed investor, or they've been running these companies for 10 years. So amongst the IPO wreckage are some great companies that can be bought by the public fintech companies and by the public e-commerce companies. So again, if you believe, and you're pretty conservative, 10% chance of a bear market, everything that I read is that everybody's just, it's a buyer strike more than selling. And there's just, people just don't want growth. But I'm watching IPOs, I'm watching the WCLD, and I'm watching IGV. Those are the sectors that I'm watching. And the further down they go, the better from a long-term perspective, because these companies are growing 30 to 50% a year. All right, buddy, have a great week.
All right, you too, Howard.
Lindsay, say goodbye. You want to have a drink? I'm just going to give